Hello guys, welcome again to another BTC video. I hope you're doing great today. Bitcoin obviously not looking too good, not doing too great. We have a good analysis for you. We're going to do micro, macro, and we're going to talk about BTC and where I think it's going. I'll also give you some relatively nice strategies for DCAing if you are in the same boat as everybody else with this market. And yeah, that's probably it for our video for today. So stick around till the end of the video because it will get very informational. As always, like, share, and subscribe. It means a lot for the channel if you could help it grow. And with that said, let's get started with the charts. So I haven't checked the charts yet. I was taking a few days off, just stress-free days. So this is the first time that I'm going to be looking at the charts. So I'm going to be popping time frame to time frame. I usually do this with my Discord updates, with my live updates on Discord, and yeah. So first of all, monthly time frame. Now monthly, I would like to look at it at the. I would like to use the all-time history index because I think it will be more beneficial for us to see it there. Okay, great. So what's happening right now in the monthly is very similar to what happened in 2019 with that capitulation and what happened also I think in 2014. As you can see, we do go below these EMAs on the monthly time frame. The only difference is that we don't close a monthly candle below them. So this month is going to end in around 2 weeks or so. So as this could very well wick still to $14,000, which is this local high over here in 2019. So it's very likely it could go there. But I don't believe we will close a monthly candle under. Now the monthly, keep in mind, is still bearish. With squeeze is still red, stochastic still below 20, MACD still cross bearish. So we are still in a bear market. There's no sign of bull market resumption yet. What we're looking for, what we're trying to identify, is a potential, consolidation bottom, at least something along those lines. And the weekly time frame, let me just pop to the weekly. The weekly actually looks pretty good, to be honest. We have a nice divergence forming on the weekly, so this is gonna just, it's about time. It's only it only takes time for this to play out. Stochastic RSI still hasn't given us any confirmation of upside on the weekly time frame, but we are in a nice position. So we're not in a position to sell. This is, for me, is not a position to sell. I sell green, I don't sell red. But yeah, there's a nice bullish divergence forming, which will give us a nice upside. Now, the upside, like I said, I don't want you to expect butterflies and rainbows by the upside. There's a lot of resistance, especially at that 30K level, 28 to 38 to 30K level. So one of the signs of the bull run resuming will probably be breaking that level. As of now, I don't see us breaking it because we are below it. We still haven't tested it as support, as resistance yet. We might go for a touch, and if we go for a touch and we get rejected there, then you can expect the worst, which is basically a long consolidation in a bear market for a couple of months. I believe 6 months from now we will be happier than today, but I still don't see it right now. The daily time frame is also very interesting. We are in that daily squeeze, which is red, so great. There is selling pressure, as you can see by the ADX, which is this indicator right here. What we would like essentially to do is start curving on the ADX and basically turn downwards. That would be a nice sign of us, having a nice relief rally. But another great sign would be stochastic RSI crossing 20 level on the daily time frame. That hasn't happened sadly yet, so we are still, bearish on the daily. It's still not bullish. The MACD is bearish, so everything is looking very bad, obviously, for BTC. But we are at those lows. We're not at the high, so we are at buying lows. We're not at selling lows. 4-hour time frame, which basically tells us the next 24 hours. Well, it's looking like a relief rally is on the go here, and I'm gonna call it relief rally because we are under the EMAs heavily, and as you can see, every time we go to the EMAs, so the EMAs are coming in around 19.6, 27, and the last one is 22.5. So as long as we're below these EMAs, we're just gonna do the same thing that you're seeing here, where we go down, hit our heads, drop, hit our heads, drop, hit our heads, drop, till we finally break above the EMAs and retest them as support, and then this is basically your confirmation of upside. Till now, this is not the case. So I still don't see any upside yet, any real upside. We have a nice bullish divergence which formed on the 4-hour time frame, which is great, and this is why we're seeing the price at least stop for a couple of couple of hours. But yeah, nothing really positive. There is one thing that I see in the charts that is pretty good in my personal opinion, which is the 12-hour. So the 12-hour has a nice bullish divergence forming on the RSI. I will just show you here. As you can see, you have a low and a lower low, and then you have a low and a higher low. So it's a nice bullish divergence. Now, keep in mind, I don't want to sound too bearish, but I don't know, when you study TA, and if you've seen my post on Twitter, you would know that when a channel breaks, so when you have a parallel channel, if you get rejected on the top, you head to the heart line, and if you lose the heart line, you go to the bottom. And this was very evident in the previous channel, so I'm going to just show you. Look at this. So this is our previous channel. We lost the heart line. We headed to the bottom. We went again for a retest. We got rejected at the heart line. Went again for the bottom. Bottom didn't hold. We broke through, and most likely right now we're heading towards this heart line. Like I said, I don't want to be a bear. I want to be a bull. But I will say, because we are at buying zones, not because I want to be a bull or a bear. It is a buying zone here. But I'm going to go out on the limb here and say that I think potentially this will be the bottom for BTC with a wick. I don't see any closes and a wick on a monthly. So a wick on the monthly will look similar to this. Let me just show you here what I mean. This is what I mean. So this is a wick on the monthly, and this just basically means by the end of this month, so June, July 1st, this candle will not be here anymore. We will not be we will be higher than that. We will close, and I'm going to be more specific with you. Let me go to the BTC all-time history index because it's more accurate there. So I believe that we will close this month EMA, this month's EMA, this month's price action, sorry, at least above 21,000, at least. And in the best case, absolute best case, we'll probably close above 26. Okay, so that's if this repeat happens. Now, to be fair, I don't see us closing above 26 right now because there's no evidence in the charts or the indicators telling us that we're going to close above that. But I do see potentially closing the monthly above the blue EMA, the dark blue EMA. And that's fine. It's completely natural. It's completely okay. As you can see here, usually bottoms are when we close above 100%, but this time it's different. I'm not going to take history 100%, into account, but what I will do say is that either of those closes will be good for Bitcoin. So if we close a monthly above 21,000, it's good. If we close a monthly above 25 or 26,000, it's great. That's one of the great signs that I will be looking for BTC. Keeping in mind that we might potentially go to that low of $14,000 Bitcoin, which is a target also in the other chart as well, if you saw it. These are my buy levels. If let me show you on the 4-hour time frame. Sorry, my chart gets too messy. I have a lot of alerts and stuff ready. So these are my buying levels right here, as you can see. Sadly, what we did is we dropped towards my second buy zone, and we got rejected on my first buy zone, which is very bad, obviously. Now, most likely we'll be, consolidating here in a range till we decide to either break down or break up. The probability of us heading up higher is more likely than us heading down lower on the macro. On the micro, it's a little bit different because there's something. If you remember our last update, I said if the stochastic RSI on the 3-day time frame doesn't bounce on 20 level, then we're gonna expect lows to hit, lower places to reach, and I believe this is the lowest place we could go. Around 14K. Now, it is also a nice area of traded volume as well. I'm going to show you as well 5-day chart, I think, if I'm not mistaken. Yeah, it's a 5-day chart. So on the and I think the weekly also shows it. Let me just check here. No, it's not the weekly. It's the 5-day chart. So on the 5-day chart, you could see that that level right there is a nice level of support. Of at least there is nice vol. Now it's not extreme, but you combine that with the heartland of the channel, it becomes stronger. Obviously, if you lose that, this is our strongest traded area of traded volume, which is around 11k Bitcoin. And I mean, if we get 11k Bitcoin, I will probably be buying again. I'm not scared. I will hodl for 5-10 years. It doesn't really matter. Crypto is here to stay, and all of these shenanigans are just tactics to remove retail from the market. And if you've watched one of my previous videos, which is a 10-year bear market theory, which could happen, by the way. It's all theories in TA. Everything can happen in TA as long as you get confirmation. And the confirmation for that video was an 1830 EMA cross on the monthly time frame. That's cross on the monthly time frame. But just if you watch that video, I was speaking about the reasons of why this could potentially happen. I mean, why we could have an extended bear market. One of the main reasons is that crypto has been a manipulated market since its inception. And we were given an idea of Lambos and quick bucks every bull run. So every time we hit a bull run, you saw, oh, this guy is making money. And then you said to yourself, let me try. So you tried to make money in 2014, it worked. You tried to make money in 2017, it worked. You tried to make money in 2021, it worked. And now people potentially want to try to make money again. Now, I'm very hesitant about the market letting us get money so easily. It will give us the money, but it's not going to be easy. That was the whole idea of the 10-year bear market theory. That the market will probably make us suffer, make us lose hope in crypto, capitulate us, let us consolidate over 14k for like a couple of months in a range, stuck like 16 and 14 and 20 and 14, lose hope in crypto, expect lower lows, whatever, and then finally institutions buy, they get in at cheap prices, they accumulate, they take control of crypto, and that's what they want. They shush out all of retail, keeping a small minority, and then bull run resumes and everybody makes money. Just keep in mind that this market is it's tailored to make the rich richer. It's not tailored to make the poor or the average folk rich. It's tailored to make the rich richer. They're trying to remove the average folk. They're trying to remove, the middle class, the poor folk out there from the equation and just make the rich richer. If you can hodl through the pain, if you can allocate a nice percentage of your money that you're okay for getting for 10 years, 15 years, or whatever, then I think your family will be very happy at the end. So whether it's going to take 3 years or 4, it doesn't really matter, or 10. What matters is that this is a nice long-term investment, and I think it will be, it will return for you in the future, as long as you DCA properly. Now, I would like to share some strategies that I use for DCAing, and that is I said this on Twitter, so I'm going to say it again here on YouTube, just so people can understand what I do. So first of all, I allocate, I take a percentage of my total capital that I have in the bank, in the savings accounts, whatever. I take a percentage of that I'm willing to invest and forget. So usually that percentage is not a percentage that I can live without, that I cannot live without. It's usually a percentage that I'm comfortable leaving for 10-15 years, and it's usually a percentage that I'm okay losing, because investments are risky, so you have to always keep that in the back of your head. So that's the first thing that I do, which is the most important thing, by the way, is knowing the number that I'm going to invest. Second thing that I do is that I put my support level. So I assume Bitcoin can drop another 50% from, let's say, from 20K, even though 20K is a nice, legit, area to buy, especially with the market being so red. So what I do is I allocate that percentage that I want to invest, and I divide it into smaller percentages. So I say, for example, I want to buy 33% here, 33% here, 33% here. Some other strategies are 50% here, 50% here. Another strategy is 30% here, 70% here. Everybody has their own strategy, basically, and own percentages. And it's up to you to allocate. Now, that percentage, by the way, I split them as I see it fit over all the altcoins that I want to buy. So if I'm more invested in BNB or Chiliz or VeChain, I'll probably allocate more of that 33% to BNB and Chiliz. But keep in mind, when I invest again at the second level, I will invest proportionally to the first level. So I will never invest more in a token that I invested less in the beginning, because I don't have conviction in it that much. I'll probably just get it for, trying to be lucky on it. But if I have conviction in it, for example, like Chili's, I invested $1,000 here, let's say, I'll probably invest at least the same amount or more at the second level. So that is what DCA is about. Now, the third and most important rule is the DCA entries, basically. So if I see a token that is, at these lows, whatever price, like for example, let's take a cake. I like cake. I buy cake. So cake is at $2.5. It is almost 22 times lower than its all-time high. So on its own, it's a great investment already, because you're buying 22 times less than the all-time high. So what I do is I allocate more percentage of that 33 to cake, right? And that would be my first entry level. Let's say $2 cake. It's my first entry. Now, if cake dips 10%, 15%, and I even dare say 20%, I'm not going to DCA again. A 20% loss is manageable and is okay on the macro. I will only start to DCA again with 30% up. So if I see cake 30% down from my $2 entry, I will probably DCA there as well. That will be another level to DCA. And if it's 50% down, you bet I will DCA 100% there for sure. And if it's 150% down, I will also allocate and DCA there. Now, just keep in mind the perfect scenario is you DCAing with entries that are 50% apart. That would be very good. So DCAing 50% of your capital at $2 cake and DCAing 50% of your capital at $1 cake. But the only problem with that is that you're assuming it's going to happen. But if it doesn't, then you're basically wrecked. So what I would do is I would, once I see that 30% difference between my first DCA entry price and my second DCA entry price, I take that money that I want to allocate, that 33%, and I inject also a partial amount to it till the dump ends. And just before the dump ends, I'll, place the remaining amount. And how will you know that the dump has ended? Well, obviously you use TA and you follow my channel or my Twitter, and you're probably going to know that, okay, we're done here. But for me, I will stick to BTC levels. If BTC goes to 14K, for example, I will check cake's price. If it's way down, I will buy. If it's not, by the way, I will not really buy anything anymore. I bought cake 2 days ago, and right now cake is like fluctuating between, I don't know, $2.5 and $2.8 or whatever, or even less, 2.4. I'm not gonna buy with a minus 5% difference between it and my DCA entry price. So that is very important. This is another very important rule in DCA that I follow that I don't see any influencer talking about, which is the percentage between entries, DCA entries. It's very, very important. It's not worth it if your token is down 15, even 20%. It will be worth it when you're, 30% up. That's when you start to think about, okay, let me start DCAing here, allocating small amounts of money here, left and right, till I allocate all that 33% over all my token. Now, what happens, the last question that I get asked is, what happens if you finish all your money? You're left with no USDT. So we DCA all these levels, we reach 10K Bitcoin or 14K Bitcoin, and then Bitcoin dumps another 15%, let's say, or 20%. Do you add more money? Do you sell at a loss? What do you do? So my best advice is, if you have money to spare, you're okay forgetting. You can inject to the market more. But if you don't have that money, I would just hodl. I would just wait for 3 years, forget about crypto, come back in a year and a half and see how my investment is doing. Put alerts on your prices just so you don't keep checking your phones all the time or your charts all the time to see if the price is going up or going down. Put alert on the highest price, put alerts on the lowest price, and just let the market do its thing, and then return after in the future and see how your investment is playing out. So that is my best advice for DCAing, and that is it for the video today. I hope you enjoyed it. Like I said, there's not much to say, but what I would say is that I expect after July to have green months coming. I don't expect any more downside after July. And I expect, monthly closes to be positive for us. So above 21K and above 26K in the best case scenario. If we don't, by the way, if we close below, then I have to analyze again because, it will be probably very, very bad for BTC to be closing a monthly where we are right now, or even lower. Wicking is fine, but closing is bad from a technical analysis point of view. But anyways, like I said, I will discuss this when and if it happens. As of now, thank you for watching the video. I hope you enjoyed it. Please like, share, and subscribe. Follow me on Twitter, link in the description below. And if you want to inquire about my private paid Discord, which has copy trading, by the way, automatic copy trading, you can also message me in my on my Telegram, private Telegram, link in the description below. Just remember, I always reply with voice notes. If I don't reply with a voice note, it means it's a scamming account or a scammer account. And if you don't want to follow us on Discord and you don't want to get the copy trading from our professional traders, you can just use the referral links below for BigKit, BingX, and Bybit, and just choose your own copy trader and just copy trade, get that passive income. Thank you again for watching the video, guys. Like I said, like, share, and subscribe, and I'll see you again next time. Bye bye.